Yeah, well, thank you very much, Matt. Yeah, it's just a little bit of afternoon here and a sunny day, so I can't complain, but it still feels like morning. I don't know. It's been a busy day here, but I'm very glad to have with us today Sushant from Tapio Finance. Tapio, I guess, is a DeFi company that aims to enhance the liquidity and utility of liquid staking tokens by introducing another token called TapETH, which is a utility driven LP token. And I'm kind of excited to learn a little bit more about this. Sushant, welcome very much to today's community call.
Thank you, and thanks for the introduction. Um, I'll sort of briefly go over Tapio, but you gave such a great introduction. I'm not sure what else to really add. But I'll start with some context. Within DeFi, pretty much the most obvious thing and probably the most meaningful thing you could do with your assets is provide liquidity, whether it be in a DEX or a lending market or things like that. Without doing that, otherwise DeFi won't work. Now, this is all good and well. Things have been going well so far in DeFi. However, with the introduction of liquid staking tokens, the whole value prop of liquid staking is that you're able to maintain your liquidity. However, if you are to do, what I just called the most meaningful thing you can do with your DeFi assets, that is provide liquidity, you'll figure out that very quickly that liquid staking journey is not very long. You provide liquidity and really that's the end of that. And the liquid staking journey, you could say, kind of ends very abruptly. This doesn't seem to be a problem with normal assets, but at least personally and the team, for something that is supposedly liquid, I don't think this is that great, in my opinion, at least. And so we started building Tapio Finance specifically for the Ethereum ecosystem. And like you mentioned, we're essentially just a liquidity aggregator specifically for LSTs. And the goal is to sort of unify all the fragmented LST liquidity in this space. So how this works is, from a user perspective, is that you could deposit either LSTs like rETH and or native ETH into our stable pools, much like you would into just any other DEX like Uniswap or Curve. However, unlike normally receiving a arguably pretty useless LP token, you instead receive Tap ETH, which, while being an LP token, it's actually pegged to Ethereum. And because it's its own independent asset, it can be used within DeFi and cross-chain. And as a user or as a holder of Tap ETH, you not only earn the underlying staking yield, but you also earn any of the swap and redemption fees generated by the pools, which we foresee to be quite a bit. Um, and then you can actually use that TAPI in downstream DeFi applications to further enhance not only your capital efficiency, but also your yields as well.
Okay, maybe we could explore that just a little bit more in there. And help me understand that if I've already kind of swapped ETH for rETH in our case, but I understand you take a number of LST tokens, not just rETH. Do I deposit in your liquidity pools just single sided, or do I have to pair it with a equal value of ETH? How does that work?
Sure. So I will differentiate us from what people would call index protocols because often we're compared to them. And I feel like we're targeting very different user bases. So instead of being just a basket of assets, like let's say if we take index co-ops product, we're instead basically multiple stable pools, and these stable pools are between the LST and Ethereum. So in this case, you could have, so at launch, we'll be supporting two LSTs because we want to take things slow and be conservative. So there'll be a pool that is, say, rETH and ETH, and then there'll be a pool that is STETH and ETH, and both of them are, make up Tap ETH. And so, as to your question regarding single-sided liquidity, you can provide just rETH. You don't have to provide Ethereum, and vice versa. You don't have to provide an LST. You could just provide Ethereum. So it's your complete freedom of choosing what to deposit. And actually, we do prefer the pools to be balanced towards the LST. Something maybe like 70-30 or 80-20 for two reasons. One is of course, the higher the proportion of the LST within TAPI, the higher the underlying staking yield, just proportionately. And then secondly, The way we price, because we're essentially a synthetic protocol, the way we price our assets is we favor one-to-one above all else. However, and so as a result, we can actually deal with what other pools or other dexes might consider imbalanced. But because the underlying assets are either pegged to ETH, like a rebasing token, or valued in ETH, like rETH, we prefer to have that sort of over representation of, say, rETH in this example.
Okay, maybe you can talk a little bit about like the price stability, right? I know it's always
Sure.
been unique for LST tokens. How do you address that issue and maintain your stability?
Sure. So we have this concept called dynamic collateralization. And what this means is, let's say the underlying LSTs are one-to-one. Or for example, in the case of rETH, which of course is a C token with an exchange rate model, if it's in a line with what, say, Rocket Pool says the exchange rate is, then the assets will be basically able to be swapped one-to-one at all times. And you could consider Tap ETH to be 100% collateralized. I don't like using that word because people normally associate it with stablecoins rather than an LP token, which is inherently collateralized, you could say 100%. However, if, say, one of the underlying assets becomes, I won't say depegged, but I will say oversupplied. And what I mean by that is because, of course, there's liquidity pools outside of Tapio, there's market activities for, say, rETH outside of Tapio. What would happen, say, if Rocket Pool's rETH were to get depegged, across the ecosystem, or say within a huge pool, or just organically by the market, people will be looking at the best place to arbitrage, whether it be organically or they would be going to a DEX aggregator like 1inch. And of course, it would redirect them to the place that has the best exchange rate. And so because we're a synthetic asset protocol and we allow for that one-to-one exchange for quite a considerable amount of time or a considerable amount of sort of liquidity will imbalance to say, a lot of that a lot of that volume will get redirected to Tapio because they're able to just get a better rate on their rETH versus other places. And so what happens then is rETH becomes very heavily oversupplied in Tapio's pools. Let's say, for example, it becomes 90-10 or 95-5, for example. Then as a result, a few things happen. One, the undersupplied asset, say Ethereum, and so just to give you context, if it's super oversupplied, the implication is that it's been mispriced in the market because people are coming here to swap in their rETH and then get Ethereum back or get STETH back because they're able to get a much better deal and they're effectively arbitraging the mispricing using our pools. And so as a result, rETH becomes very heavily oversupplied in Tapit's pools, and Ethereum becomes very undersupplied because people are obviously, swapping their rETH for Ethereum to realize this arbitrage. What happens then is that the undersupplied asset becomes very, very expensive. So Ethereum, instead of it being worth, say, in the context of the pool specifically, if instead of the exchange rate being one-to-one, let's say if you deposit, say, one Ethereum, you get a lot more rETH in return. And so it's discouraged to, remove the Ethereum, and it's actually encouraged to to get rid of the oversupplied assets. So for example, in that scenario, you could actually get rETH for far, far cheaper, removing it from the pool. And as a result, because the pool is sort of always biased or always, um, let's say, yeah, I guess bias is the right word, towards over collateralization, there'll never be a point in time where the price of rETH within Tapit's pools will be to an extent that the overall pool becomes sort of under collateralized, if that makes sense. And then on top of that, there's also another mechanism is that the undersupplied asset in this scenario, Ethereum, you can actually deposit this into Tapit's pools and get a lot more Tap ETH in return. So it's kind of like, we give users the ability to arbitrage the, say, let's say the mispricing of rETH, and, we want to bring it back to parity. They, of course, have the opportunity to either, swap out rETH at a discount and then swap in ETH at a premium, or alternatively, they can actually use Tap ETH as the vehicle for their arbitrage by supplying ETH to mint Tap ETH, and they get a lot more Tap ETH for their Ethereum. Or alternatively, they can redeem their Tap ETH for far more rETH and then wait for the market to sort of equalize for them to realize that arbitrage. So let me know if I've answered your question or if I should go into more detail.
No, I think you're explaining it well, at least to the degree that I can follow here. And maybe just as a few follow-up questions, though,
Sure.
the tap ETH that is minted is kind of your receipt or your liquidity token. Is it the same token, irregardless of what pool I join, whether I join the rETH ETH pool or whether I join the ST ETH pool? Is it the same token? Meaning, does it allow you to do kind of a redemption or arbitrage across these pools?
Correct. So in that same example, that tap ETH that you have can not only be used to realize the arbitrage of rETH on Ethereum, but it could also be used on the ST ETH side as well. And so if you were to deposit liquidity, say, into the ST ETH pool, you would get tap ETH. If you were to deposit liquidity into the rETH ETH pool, you would get tap ETH. And when we add on new pools like SFRX ETH or Sweet, etc., the same story. However, because our pools are fundamentally siloed, so for example, instead of the underlying LSTs being directly exposed to one another like you would have in a typical index product where it's just a huge pool with a bunch of different assets sitting in the same pool, these pools are all fragmented in terms of they don't have direct exposure to one another. However, of course, through the DApp, you can interact across the pools. But the reason why we have this is specifically for security, because let's say one of the underlying assets fails. And of course, we'll have a lot of due diligence and this and that too. Obviously, we're not going to onboard any assets that probably have the risk of failing. But for argument's sake, if say, your rETH is sitting in Tapit's pools, it's generating a lot of yield, etc., and then SCETH fails, what we could because the assets aren't directly exposed, there isn't direct contagion. But in a worst case scenario, we could actually remove that pool from Tap ETH, meaning you wouldn't be able to interact with it, and vice versa, protecting the other assets within Tap ETH, which would include rETH.
Oh, interesting, interesting. Maybe you can share just a little bit more about kind of the rewards and fees. You made mention that in addition to earning the underlying yield or some share of the yield from holding the liquid staking token like rETH,
Yep,
you also earn some additional rewards. Can you talk about those?
sure. So, like you mentioned, you of course get the underlying yield from the underlying LSTs, and you get this yield in more Tap ETH. You don't get them in the corresponding liquid stake tokens, because obviously that'd be very, very gas intensive if you were to redeposit your assets within Tap ETH. But the other two fees, and we'll have quite a few, but to begin with, we'll have one that is swap fees and one that is redemption fees. Because we're very confident that we'll be able to provide the best exchange rates and the lowest slippage when it comes to LST swaps, we feel that a lot of the overall sort of swap liquidity between Ethereum and LSTs will be redirected to Tapio. And so that in itself will generate quite a lot of swap fees for Tapio holders because it operates just like a typical DEX. And these swap fees can actually be adjusted by governance when our token goes live, but at at launch, they'll be very, very low. And also, like I mentioned earlier, the exchange rates will be, very, very stable. So even if other dexes, like say Uniswap, it's very, very sensitive to composition change. If it becomes 50, like 49.50 or 45.50, 55, it'll be very quick to apply these discounts. So you're not really able to, realize any meaningful arbitrage or really have any consistent pricing as a result. So we have that super high stability when it comes to the underlying pricing of our assets. But then also there's the redemption fee aspect. And so I did briefly touch on it when I gave the arbitrage example. Um, if you want to say leave Tap ETH, you can redeem your asset, you can redeem your Tap ETH for any combination of underlying assets. If you only want your rETH back, you can do that. If you want a combination of rETH and ETH, you can do that. And if you want any of the other LSTs, you can also redeem them. However, Tap ETH is also a tool for arbitrage itself. And so in that example I gave where let's say one of these assets, say rETH, is mispriced in the market, and people are trying to arbitrage the mispricing against native ETH, they can also use Tap ETH to sort of buy it on the open market because it'll be one to one more or less. And then they're able to come to Tapio's DApp and then redeem that Tap ETH for any combination of the underlying assets, meaning they're able to realize that arbitrage in different ways. And we feel like that will be quite a considerable amount of fees as well from the redemptions. And so we actually have it isn't Tapio, it's a protocol called Tiger, which was an experimentation protocol that we launched on the Polkadot and Kusama ecosystems. And what we saw was that you could earn, say, for argument's sake, 15% stake holding a liquid stake token of DOT or KSM. However, if you were to hold TDOT or TKSM, you could earn almost 20%, meaning a much higher yield versus just holding the underlying LSTs. And this is even before you would utilize Tap ETH in any downstream DeFi applications.
Okay. You'd mentioned a little bit about maybe changing some of the settings using governance. Is Tap ETH going to be your governance token, or is there a separate governance token?
There will be a separate governance token because Tap ETH is fundamentally we want it to be used in the place of Ethereum. Of course, Ethereum and the underlying LSTs will have their own utility, but we want to see Tap ETH used quite extensively within DeFi. However, it won't be a governance token. It'll merely be, you could say, for argument's sake, our LST. What will be used for governance, however, will be our protocol token, which will be Tapio. And so we'll also be utilizing V tokenomics, meaning you lock in and you get additional, vote escrow tokens in return, being V Tapio. And so then you'll be able to use this within governance decisions, whether it be to say change the pricing curve, change the underlying fees, change the proportion of fees the treasury will collect, because at launch, and maybe even for the first 6 to 12 months, the protocol won't take any fees. All the fees that are generated by the protocol will go back to Tap ETH holders. However, if the community feels, earlier on, actually, you know what, the treasury should collect a little bit of these fees and they should be distributed to VTapio or Tapio holders / lockers, that can also be decided.
Okay. You mentioned a launch. Where is Tapio now? Are you on Gorilli, and when is launch, or do you have a launch date?
Sure. So we actually have a testnet campaign that went live 2 days ago, which has been very, very successful so far. We have over 20,000 participants at the moment, and we're only on day 2. And so you can go on test.tapio.finance, which is live on Girly, and you can utilize more or less all of our functionality. And so that is minting Tap ETH, which of course is depositing liquidity. You can use our swap function. You can also redeem Tap ETH for any combination of underlying assets. And you can also use the claims function as well as see, APRs and a historical APR graph and so on. And so everyone's welcome to check it out.
Okay. And when you
Sorry. I was going to say that for mainnet launch, we'll have this testnet campaign running for at least 30 days. However, depending on what the community as well as partners feedback, we might extend it to 60 days, which would push our mainnet launch, between, let's say, August to September, maybe.
Yeah, perfect. That was my kind of follow-up question there, was the expected timing. And when you launch, is it going to be on mainnet, or will it be on one of the L2s?
It'll be on mainnet, because of course that is where the vast majority of liquidity will be. However, very, very quickly we'll be able to have cross-chain functionality, meaning you'll be able to take your Tap ETH to a layer 2 and realize any yield opportunities there. However, one thing we are also thinking about is making Tapio itself cross-chain functional. If you're familiar with all of the cross-chain messaging technologies that are kind of picking up speed, what will be really meaningful for us is that having liquidity on mainnet Ethereum is great, but it'll be really good if liquidity is actually accessible on all the layer 2s natively, as well as being able to distribute rewards to Tap ETH that isn't on the mainnet. I haven't really gone into the model of Tap ETH, so I will briefly touch on it. I know it's somewhat tangential to your question, but I think it's quite meaningful. So typically you have either a rebasing model for say STE, where every single day you just get more of that asset over time, and then you have rETH, which I prefer because it's DeFi native, where it basically has an exchange rate model, meaning over time the value of rETH goes up, which makes it able to be used within DeFi natively, etc. So we decided against using either of those two for multiple reasons, but to keep it succinct, Tap ETH will use a claim function, meaning rather than being rebasing or it increasing in value over time, because it's pegged to ETH, as rewards are generated by the protocol and being distributed to Tap ETH holders, you will effectively just go into our dApp and then click a claim button, and you will get more Tap ETH, which is reflective of the swap fees, the redemption fees, as well as the staking yield. Now, of course, the biggest criticism of that is that it's inherently gas intensive, because every time you want to realize your yield, you have to interact with a smart contract to give you this yield. Which is completely reasonable and understandable. However, because our focus is on capital efficiency and utility, if you were to say use TapETH in a downstream DeFi application, that protocol could actually claim the rewards on your behalf in a boilerplate way, such that you can do whatever you like on this DeFi protocol, and you'll still be earning the TapETH yield along the way. And we want to extend that capability to the layer twos and any other chains we deploy on.
Oh, interesting. That is pretty innovative there. Couple last questions for you. Will there be any
Sure.
incentive for those in the Rocket Pool community listening along here to either participate in your beta test or participate as an early adopter?
Sure. So in the testnet campaign, there will be one of the rewards is eligibility for a very small airdrop. We'll have a much more sophisticated and in-depth campaign for mainnet. However, that still hasn't been released publicly just yet. So that would be a meaningful sort of thing you could do as a member of the Rocket Pool community. However, the biggest, I think, incentive is to really increase the capital efficiency of rETH and its utility. So personally, I'm kind of biased, but my favorite LST by far is rETH, just because it shares the same value with just standard Ethereum, whereas some of the other LSTs don't really. But something that I personally feel is that there isn't enough utility, or there isn't really enough yield opportunities for rETH within DeFi. That's just my personal opinion. However, if you were to compare it with some of the other LSTs, it's kind of like there's a million billion things you can do with these assets. And so what we really want to provide to the Rocket Pool community specifically is a place where you're able to get, not to get into too much details, but the rETH pool on Curve, the pricing curve is not great. It's effectively as if you had a pool on Uniswap. Meanwhile, the stETH pool has basically it's like 1-to-1 for as long as you like, and it's very very different. If you look at the A values on Curve, it's night and day. And so we want to provide that stETH ETH experience that you would have on Curve, but within Tapio. So that's number one, and then number two, we're going hard on integrations and partnerships straight from launch for TapETH, meaning as an rETH holder or as an rETH maxi, if you deposit your rETH into TapETH, you'll have tons and tons of things to do with TapETH while your rETH sits safely generating yield.
Interesting. And Sushan, is there anything that we haven't covered yet about Tapio that you feel is important for the folks on our call to know?
Sure. So I think the biggest thing is something that's really meaningful is our token model for Tapio, the actual protocol token. So something we've seen in the first wave of LSDFi, and within DeFi, this is quite common, but it's the idea of incentivizing your own liquidity, so your own TVL, which is perfectly meaningful and a good thing to do, especially if you're bootstrapping. However, we don't think it's necessarily conducive in our position as the sort of middle layer between LST liquidity and downstream DeFi applications to really go hard on doing the same. We could incentivize TapETH liquidity and TVL all we like, but we don't think it really, dovetails with our entire mission of increasing capital efficiency and utility for these LST tokens. So instead, of course, full disclosure, we probably will incentivize TVL a little bit, just because it's somewhat needed. But the vast majority of our incentives will actually go to downstream DeFi applications. And so how this works is, I mentioned governance earlier, but as a Tapio voter, for example, you can actually select which one of the downstream integrations of TapETH receive what percentage of Tapio emissions. And the idea is, rather than incentivizing our own liquidity, we'd like to actually incentivize the use of TapETH in our partners, meaning let's say we'll have a bunch of mainnet integrations at launch, which I can go into if you're interested. Actually, I will go into them because you did ask. It's anything I think the Rocket Pool community would find meaningful. So for example, let's say we have Gravitar protocol. Great protocol, and I know it's a darling of the Rocket Pool community. Great team as well. If you had, say, TapETH and Rocket Pool, you minted GRI against it, and you were using that stablecoin to do other things within DeFi, what we'd like to do is actually direct some of Tapio's emissions to Gravitar, meaning the APR they're able to provide to TapETH depositors would be, of course, the underlying Tapio yield that the user would generate anyway, and then a bunch of Tapio emissions or Tapio incentives on top. And this would be extended to all of our downstream partners, such that not only the users have incentive to sort of, vote on the protocol that they use the most, because they obviously want the most emissions to go there, but also the protocols themselves have a lot of bargaining power because they're able to vote and actually draw incentivize their own liquidity using Tapio's emissions. I feel I don't want to speak out of place. I don't think I've seen anything like this done before, but maybe I'm completely wrong on that. But we really want to sort of incentivize the use of Tap ETH within the ecosystem rather than just incentivizing, building up a huge war chest of TVL. And just to continue on briefly, so we will have a bunch of partners live at mainnet. We have been talking to quite a few, and we're trying to figure out, integrations and all of that. But off the top of my head, we'll have Pendle Finance, which is one of my favorite DeFi protocols in the ecosystem. You'll be able to buy it at a discount. You'll be able to trade Tap ETH's yield, and eventually you'll be able to use Tap ETH to deposit it as liquidity. We will also be talking. We're also going to be going live on a few stablecoin protocols because it doesn't make sense if we're talking about utility and capital efficiency if you're not able to mint stablecoins against it. And so we'll be talking to Libra Finance. Their V2 is shaping up to be something really, really meaningful. And I know they were in the first wave of LSDFi, but I wouldn't fade them in the slightest. We're also talking to Abracadabra Money. If anyone's been around since DeFi summer, you'll know very well of them. And again, you'll be able to use Tap ETH as collateral to mint stablecoins against it. And then I did mention Gravatar Protocol as well. Same story, friendly liquidity fork, excellent team. And most likely we will have a pool on Balancer with utilization of that pool's BPTs in Aura for additional yield, as well as on Maverick Protocol, because Maverick is probably one of the best dexes in terms of capital efficiency, and we really like the team as well. And we'll have a bunch more integrations coming, soon after launch. Talking to Raft Finance, I've spoken to the Prisma team, and so on and so forth. So I'd expect quite a lot.
Wow, that's quite an impressive list of launch partners that you have going there. Dushan, if folks want to learn more either about the protocol or get in contact with you after listening to this, what's the best way to do that?
Definitely, I'd follow us on Twitter because we do post quite regularly of updates, especially now that we have a testnet campaign going live, or rather is live. Check out our documentation because it's quite in depth. There is, of course, this quite a brief conversation we're having, Ken, so I haven't gone into crazy, crazy amounts of detail, but I have written quite a lot in the documentation, so feel free to explore that. And of course, visit our website at tapio.finance, and you can join our Discord and join the community.
Yeah, perfect. I think the Discord, I know a lot of our community hangs out quite a bit in Discord, so that would be great. And yeah, I
For
did have
sure.
a kind of reviewing for today's call your documentation and explainers, and I thought they were very well written. So credit to you on that.
Thank you.
Yeah. Well, thank you very much for joining us on today's call here. And it sounds like a very interesting protocol, and it will be exciting to kind of see how the feedback comes in over your beta test here. But it definitely sounds like something worth checking out and exploring.
For sure. One last thing to mention, we have been audited by SecBit as well as MixBytes, and we'll be having more on the way.
Oh, excellent. Yeah, thank you very much for mentioning that. Well, you're absolutely welcome to stay for the rest of the call here, but I think I'll turn it back over to Mav, and we'll go through some updates for just the general Rocket Pool community. But again, thank you very much, Sushant, for joining us on today's call.
Thanks for your time, and thanks everyone for listening in.
Hello again, Ken. It's always interesting to hear about the increasing world of LSDFi that I think we're starting to call it, with D standing for decentralized, of course, not derivative. But yeah, it doesn't really show any signs of slowing down, that's for sure.
Yeah, is that a real term, or did you just make that up?
I did not make it up, but I think it is becoming a real term, let's put it that way. Do see it thrown around a little bit from time to time. I guess a combination of liquid staking and DeFi. At the end of the day, I guess we are taking, in many cases, existing DeFi products and reinventing them to to be supported by or collateralized by liquid staking tokens. Certainly when it comes to stable coins, there is still a lot of that going on. And actually, there's some news on that front overnight. I think I just caught it when I woke up for this call. Another option for minting a stable coin with rETH.
Interesting. Yeah, no, it is absolutely fascinating to me that just the number of integrations that are occurring in the DeFi space, and we'll probably talk about just a little bit more. I mean, I myself am getting back from a little bit of a work trip, so I've been kind of out of tune a little bit with the Discord channels, right? And so I'm trying to come up to speed. But it's absolutely just amazing how much the scene is changing in the days ahead. And we were talking in kind of preparation for this that Langers was on yet another staking panel this morning, right? Many such cases of staking panels, but there seems to be no stopping the demand for Ethereum staking, right? I mean, the node operator queue, it continues to maintain very high numbers even at the higher processing rates. And I think I looked this morning, it was still something like a 45 day waiting period in the beacon chain validator queue. So that was very impressive to see.
Yeah, lots of panels. I think there's maybe still one or two more that we are just confirming up and adding into the event section on Discord. Always seems to be the case. And yeah, it's not as if we just say yes or can say yes to anything that comes along. Sometimes there is a bit of a clash when it comes to the space, whether it's timing or something else. Unfortunately, a lot of the time it ends up being something like 3 a.m. in Australia. But yeah, even with the ones that Rockable does turn up to, there's a lot of them. And yeah.
Yeah, well, I have to say this morning's one, I haven't listened to it yet. Replay, it was 6 a.m. for me. That was just a tad bit too early, so I did not make that one or the one that was earlier in the week. So, but yeah, always interesting. A couple of things for it. I kind of wanted to talk with you, Mav, a little bit about the roadmap ahead. But one of the things I did see, just to let one kind of know, is Joe had posted a release, and this one actually had I read it too fast the first time. Truth be told, and I thought, oh, version 1.9.8 is out. Let me go update my nodes, and I went to update them, and it kind of returned that I was still in version 1.9.7, and I thought, what did I do wrong? So I tried it a couple of different times, and then finally I went back and reread the post. I guess Joe said 1.9.8 is coming out soon, but he did mention there were a couple of recommended updates for those on Nimbus, Lodestar, and Flashbot. So you may want to manually update to those versions. But it sounds like soon for the next version of the Smart Node stack.
Yeah, I think the story was he was hitting a couple of delays with some of these client teams just confirming stuff for him to then go and push the update. At the same time, he is still continuing to work on version 1.10, I believe it is. Yeah, there should be more coming soon. I feel like it's pretty standard these days for as soon as he pushes a new Smart Node version, there's a raft of changes that come through. So it's kind of like a never-ending battle there.
Yeah, now with the number of clients both on the execution layer and the consensus layer, I'm sure it's like the never-ending story of herding cats and doing the timings. But Joe did get me by making it look like it was a real release. So I guess note to self: actually read the post before hitting the update button. But man, tell me a little bit now about the roadmap here. I'm trying to keep up with everything here. I did catch the latest of the the weekly orbit with Pat and Whack, and so I feel like I'm up to speed a little bit and had kept on. But bring us into the inner circle for a moment, right? You're attending the team stand-ups and have kind of a sense of what's going on. What's the direction, or what are the kind of the thoughts now in terms of the roadmap in the summer? Or, are there a number of vacations coming, or there's some interesting projects that they're working on?
Sorry, just 2 seconds. All right. Yeah, I guess I would characterize roadmap and the work that's ongoing right now is a state of preparation. So there is a lot of, I suppose, what you could call R&D work, kind of like foundational work going on behind the scenes. Of course, we do give a brief overview of most or all of this in the respective bi-weekly updates, but a big part of all of this is the roadmap, right? So if anyone's unaware, future rocket pool upgrades, whether that is called Saturn or something else, there's been a big push to get as much feedback and input from the community and the DAO as possible, and that goes into crafting priorities and the roadmap ahead. So a few topics that are quite relevant is the mega pool design that I think we've decided to call it, not gigapools, although I suppose at the end of the day it doesn't really matter what prefix you use. The end idea is the same, which is a single mini pool smart contract. And then there's a lot of ongoing work around PDAO voting, getting that on chain, and the ODAO review, and then also this new website which is continuing to come together. So lots of, I suppose, different angles looking at different parts of the protocol. And while I think there was some commentary around Atlas being a pretty big upgrade and wanting to perhaps scale it down for Saturn with the potential number of improvements that could be made to Rocket Pool, the Saturn upgrade could end up being just as big, maybe bigger.
Yeah, I'm laughing right now because that was kind of my analysis, right? These nimble, smaller protocol updates, right? The wish list that on the roadmap and the different things that surprisingly seem to be coming faster, which are some of the Ethereum upgrades with non-expiry exiting messages and perhaps larger validator maximum sizes and stuff. I mean, it seems to be happening at the protocol level much faster than I anticipated, which means that the team here is really going to have to be Johnny on the spot and get all these things into the next update. So Saturn might be the right name for the next release.
Yeah, true. And that is a good point. I do have to agree with you there. And it is a little bit tricky for any liquid staking protocol like Rocket Pool when you're kind of following a bit of a moving target, so to speak. Ethereum itself is not standing still. So what we do is obviously based off Ethereum itself. And as there are a range of improvements being made that reflects on our plans. So, even in the best and easiest conditions, dev work in crypto is not easy. But for us being on the bleeding edge, so to speak, when it comes to staking and liquid staking, it's not just enough to know your own protocol and to manage the process around upgrading it. You have to follow pretty closely what the Ethereum researchers and dev teams are doing as well, which can change. Yeah, I believe a lot of these kind of planned future upgrades, I felt like they were further away than they were. I suppose maybe it's like withdrawals as well, that it's talked about for so long and the merge, and then all of a sudden it's here and it's happening pretty quickly. and you have to react to it. But yeah, lots of moving parts. It makes for a pretty exciting time.
Yeah. Now, I was out having a lot of fun on kind of vacation, like I said, or a work trip out to Spaceport America, and actually got to see a whole bunch of. I was a real rocket scientist for a little bit. Got to see a whole bunch of collegiate kids and engineers launch rockets in competition for it. And so, kind of coming back, was there any announcement about any of the hires that the team is underway, or is that still a work in progress?
So I know that the interviewing process is well underway. I think Langers and Dave had maybe 3 yesterday, at least 2. So this is first round interviews. There is a shortlist that's been created. Quite a few promising candidates by the sounds of things. And I think we've talked about this on one of the previous community calls. I think it might have been one hosted by you, Ken, about the possibility of an additional hire.
Yeah. Yes.
Yeah. Because the hiring process is not easy, right? And again, I think probably more so in the crypto world, it's pretty important when you have a highly decentralized, dispersed team all around the world. You see each other once a year in real life. You need to make sure that the hire is a good fit for the team. I said before, there's not a lot of traditional day-to-day management in terms of, I guess, if you want to call it micromanagement. It's up to kind of everyone individual to do their job. So a big part of hiring for any role, whether that's a dev role or another role within the protocol, is that kind of cultural fit. And that is not something that's necessarily easy to get off a CV, or even necessarily easy off a single phone call. I believe there will be kind of a second round of interviews later on. So as a result of all of that, it kind of makes sense to take your time and devote a lot of energy into getting it right, because when the process does go right, obviously the returns on your time can make it very worthwhile. But if you're going through all this effort to screen a lot of applicants, and we do get a few apparently that maybe don't meet the technical requirements in terms of skills or experience, but are overall pretty outstanding and might be suitable for a junior role, maybe replacing Joe. Not that Joe's going anywhere, but I think that joke of junior dev has probably run its course. And if there was an actual new junior dev hired, in addition to the role that was being hired for a more senior developer, he'd maybe be grateful for that. But then also, it's a win-win for everybody, right? The protocol gets another great team member, and the energy that you've put into screening applicants, you kind of get 2 for the price of 1. I have to say, for me personally, in the past, when I've kind of worked with other smaller and dispersed crypto teams, I've seen examples of someone being very qualified on paper and someone else perhaps not having the same amount of qualifications, but again, a great culture and attitude. And that is something that's oftentimes worth more than something that perhaps can be learned on the job. Exciting potential to not grow the team by a third, but potentially 50%, if you can believe it, going from 6 to 9. So that would be the dev role, potentially a junior role. There's no guarantee, but I have heard some good things so far from what Dave and Langers have been sharing during the daily stand-up. And then we have this other mysterious biz dev. I think ecosystem lead is the title, and that could be as soon as the next time you are on a community call, Ken, we could have an announcement, an introduction out. I don't know if they'll be joining that call to introduce themselves, but I'm sure they will be on a call at some point.
Oh, well, that is actually fantastic news on both parts, right? To realize that they had found a number of qualified and well-fitting applicants that perhaps there could be multiple offers on. And because I think it is absolutely amazing to see what the team has done at the size of the team, right? And then you look at the other comparable protocols that are on the the top 50 CoinGecko list, and look at their dev teams compared to ours, and it's quite astonishing what you and the team have been able to build and so forth. And so that's just great news, and to hear that you're that close on the marketing and strategic alliance position, I mean, that would be excellent. So fingers crossed on my end, but I'm pretty happy hearing that news. You mentioned a little bit about Nick and the project he's been working on the website. I don't know, maybe I'll believe it when I see it, right? There's been rumors of this thing. There's arguments. Orange, are we, OG orange, or will it be a different color? What will be the website looking like? What's the latest on that? Is he still working on that? Will there be a new updated website?
Yeah, he is. I think at this point, a lot of the work is actually coming from Langers in terms of helping to guide the content that's going into the website. So yeah, as I understand it, a lot of the kind of the shell, so to speak, has been built out, and we're getting the content plugged in. It's a bit of an interesting one because part of what we wanted to do was to bring more information that is on the doc site or elsewhere within the ecosystem and put it on the main website. I think in the past, a lot of the information about Rocket Pool, while it is highly detailed and very complete, it has lived in the doc site, kind of with the view that if you were going to run a node, you're going to be digging through all of that anyway. You should be. And if you're liquid staking, on the other hand, it's pretty straightforward. Hold the token, you're good to go. But there is a need to bring more of that information out onto the main website. So part of this process that we're going through right now is deciding which parts should be made more prominent, how they should be displayed. We do have kind of separate areas, landing pages that have been built up. So yeah, it is more of a content thing at this stage. I think I've shared this in the past, but worth a recap because it's been a little bit since we've talked about the new website. It is a completely new website, so the design is brand new from the ground up. There is less orange. The orange color and overall branding has not changed though. As far as like the logo, some of the fonts may be tweaked. I think that was something that Nick was spending some time on, and a lot of the kind of design elements on the website will be refreshed in terms of using some 3D assets here and there. I think overall the end result is it does look a lot sleeker, maybe you could say more polished, professional, but maybe does lose a little bit of that orange charm that the existing design has. I know we do have a light and a dark mode, of course. I wonder at some point in the future maybe we could have an orange mode or a retro mode to kind of flood the website with orange like the current design. That's another thing.
That would be good. Like do full on orange Cezanne, right? Like super bright orange. That would be great.
Yeah. One thing that Nick did mention was even just with light and dark mode, trying to build up a kind of, I don't want to use the word partnerships, but certainly an integrations page with everyone's logos and how they would display in light and dark modes that was quite the challenge. It's something that we don't have right now on the main website, and most of the times it is something you would find on a protocol's website. But just harvesting and formatting the ever-growing list of logos that you'd need for the Rocket Pool integrations page, I feel like that would almost be a full-time job, right? Like you wake up the next day, who do I have to go and get now? But
yeah, I could definitely see that. Well, I mean, that actually sounds really good. I mean, to your first point about the content, I'm shocked for as long as I've been in the community, right? I think I know the website. I think I know the Discord server, yet there are like layers upon layers. It's like literally an onion, right? And, I'll come across a part of the document site or the forum or the Discord, and I'm like, I've never been here. I've never seen this. What thread is this? Like, how do others not know about it? So I think that is probably a key challenge that Langers is having to deal with, is how to make the documentation and the important bits more accessible and more readily visible and more more easily searchable and findable for new users and new node operators.
Yeah, and then once it all comes together as well, there'll be rounds of reviews. The kind of the whole end result has to be looked at as a single entity, right? When you're kind of down in the weeds, putting bits into different landing pages, I think it's easy to get disconnected from what should be a pretty smooth experience for someone navigating between different parts. Like originally we did have the idea of having quite separate and distinct spaces for the node operator side and the liquid staking side, and then it turned out we'd be kind of duplicating a lot of information across those two areas, so that was something that we had to look at as well. I guess at the end of the day, Rocket Pool sadly still to this day is unique in having that node operator part that is permissionless. So while most liquid staking protocols can get away just with the kind of brief liquid staking part, for us the two sides are quite different, but at the same time do have quite a bit of overlap. So solving that problem has been an interesting one. I'm sure at some point there will be some sneak peeks into what's being built. And I think this also ties into some of the work that I've been trying to get off the ground around kind of quote unquote marketing assets. But if there's anything else we wanted to chat about the website, maybe we could go through that first before I start to share on the marketing side.
Yeah, the only question I had on the website, I guess, well, maybe two questions, is one, we're going to need a merch store here, because as we're moving to just like an orange highlighted protocol, right? I really can't wear all the orange wear that we get with Rocket Pool, right? I look too much like I'm going out hunting, right? Wearing my safety orange, either that or I'm a convict and escaped, right? So we're going to need a better merch store and better stuff. But when do you think we might have a sneak peek on it, or a pre-release that we can all be jonesing over it and trading? You think that might come out this summer at all? Oh, Mav, I think you're still on mute here.
Yeah, thanks. I was just trying to convert summers and winters, but I mean, I don't want to
think we'll have a couple of months.
Yeah, don't want to speak for Nick and Langers, but I feel like that is a possibility for sure. At the very least, a sneak peek, if not a more kind of detailed overview of what's being done. Yeah.
Well, interesting. Well, thank you very much for taking us a walk inside the team stand-ups. I really felt like we got a lot of bread out of the last 15 minutes of conversation. So thank you very much. But now tell us a little bit more about the next topic and kind of the integrations ahead. What are you thinking, and what can you share on that area?
So Yeah, what I was referring to earlier kind of ties in to a certain extent with the website, or at the very least as far as how the website kind of helps to drive the Rocket Pool brand look and feel. So again, to kind of clarify, we're not looking to do a rebrand or even a brand refresh, but just as far as things like the website, its components and its graphics not being quite as orange as they are now, you kind of expect some consistency to flow through to other assets that we have. Just simple things like the graphics that we use for these community calls and Medium articles. So I've been discussing with Dave for a little while now about kind of, I guess, flowing that design language through, but also creating a much wider library of assets for us to use. Again, it will be still mostly focused on the organic channels that have served us so well to date, but there is a lot of work and improvement that we could be doing there. There is a bit of low-hanging fruit, and it does make sense to kind of do this in a coordinated way, right? Rather than create a whole lot of assets and then end up tweaking them to kind of reflect the new website look and feel. If we could all get it done in one go, and yeah, again, not necessarily a brand refresh. I guess maybe it is to a certain extent. But
And what are these? Are they like little explainer animations or logos or infographics? Help me understand a little bit more what you mean by the assets.
Yeah, I guess it's kind of a cross between those couple of examples that I use as far as the community call and the Medium articles. And then at the other extreme, I guess you'd have like some of the content that Sleety has put out under, I think is it Token Motion, the Twitter account that has created some animated threads explaining Rocket Pool. So in the past, I did have a brief chat with Sleety about some of this work. Not sure if he remembers or not. Unfortunately, it has been moving pretty slowly. But yeah, kind of moving more, I guess, towards that direction, just having a more comprehensive library of assets that can be used to help explain and promote different parts of the Rocket Pool protocol, whether that is, say, something we can use every month for the smoothing pool, or every 28 days, once that kind of comes around, to highlight the benefits of being a node operator and joining the smoothing pool. As part of that, you'd want to kind of have a way to brand the smoothing pool as like an idea, an entity, a concept. How should it be displayed visually? Is it the blue raspberry smoothie emoji that we have on Discord, or something else? But just getting assets that are kind of fit for purpose, and the kind of things that you've probably seen if you are out scrolling Twitter every day like me, that some of the protocols put out. I think it's about time that we kind of level up a little bit in this area.
Yeah, no, it's kind of funny because like you don't think about it much, but I've seen protocols that are nowhere near as, let's say, reliable or as well tested or as capable as Rocket Pool, but because they've got a better branding or corporate communications, unity of stuff, right? It appears to the uneducated, right, that, oh wow, look at this looks really put together and must be very good, but it's just a lot of fluff on it versus Rocket Pool. If you look back at it, it's got very sound programming, of great community, right, a well thought out tokenomic model, but it's got kind of these homegrown images and icons, like you said, the Joe's favorite smoothie drink icon for it. And so somebody just coming into the community is like, what is that even a picture of, and what happened to the handle? Why is it broken, right, in the image, right? And sometimes it's a little hard to explain if you're not from within the community and know some of the history on it, right? So I can definitely well, I'm pretty excited and looking forward to that in there. Two other questions I kind of had for it that I could think of, and there might be some other topics that you want to include. But one of those things that was kind of, first thing I got back to kind of the home terminal here and was able to get some good internet time. I was real quick to go look to see what happened to the node operator queue and kind of the balance for it. And it is always kind of this ongoing, I don't know, struggle, or this kind of pull and push with Rocket Pool is, it does have these two faces to the protocol, right? The node operator side and the liquid staking token holder side of it, and trying to obtain that balance. And I looked today and we're actually pretty well balanced, right? There's just a little bit of ETH in the deposit pool, and, seems to be pretty good flow through in the node operator queue as well as deposits, right? But kind of, like, what are you thinking in the future there? Should we be starting to think more about recruiting and bringing in more node operators? Are we going to go to node operator constrained again? And if so, what are some of the plans with Rocket Pool to help bring in more node operators if we think we're going to be node operator lean?
Yeah, it is kind of happened pretty quickly, I feel like, even if it is only temporary. I think the team's view has always been that over the longer term, however you want to define that, the constraint will always be in terms of node operators, because it is comparatively easy to manufacture demand, even for liquid staking. It's always going to be pretty popular, and rETH is a pretty compelling option. But for node operators, there is only ever going to be so many people, and still a growing pool of people, but that meet all the kind of requirements to be a node operator. For most people, it is still probably easier than they think and achievable, but there are some kind of basic requirements. Whereas, as we know, for liquid staking, it is perhaps one of the easiest things to participate in the ecosystem. Simply hold a token in your wallet. You can do that in your sleep, quite literally. So yeah, in the longer term, there will always, I think, be a drive to onboard and retain node operators, and there will always be these kind of short-term bursts of imbalance towards the other way as the pendulum swings, so to speak. Of course, recently that's been as a result of the Atlas upgrade, which has been pretty successful and saw not only a huge flow of people converting from the old 16 ETH mini pools, but new node operators onboarded as that barrier to entry was lowered. So I suppose to answer that question in terms of making it more accessible, there is always the potential for a lower LEB number going forwards, and this is something, as we talked about earlier, with kind of core Ethereum protocol upgrades coming through at a pretty decent clip. It enables protocols like Rocket Pool to push out further upgrades and to do so in a safe and secure manner, which is obviously number one and most important, and there'll never be a compromise on that, regardless of how attractive the growth opportunities may be. Of course, as we know, security always has to be number one in this space, because it doesn't matter if you have the biggest and best protocol in the world, but it goes to zero overnight if safety and security are compromised, even maybe just in a small way. So there are things further down the line that can be done to drive more demand for, at the very least, node operators, or to make the existing node operators more efficient, which is probably a better way of explaining it. At the same time, though, there is always this kind of push and pull between how easy should we make it to run a node, right? We say anyone can be a node operator, and I think that's true, so long as you take the time to understand what it is you're doing. We've said before, the documentation is all there. As we know, there's great support in Discord. The smart node is pretty good too. But there are, even today, still cases of people who maybe get a little bit in over their heads. So maybe there's steps that could be taken by Rocket Pool, by Ethereum, by someone else in the ecosystem to make it more accessible. But we do have to kind of ask the question: do we want it to be kind of a one-click GUI at some point? Probably the answer to that is no. There still needs to be, I think, some level of understanding of what's being involved, and we don't want to abstract too much of that away. I think it's Valdorf, his phrase that he says on Discord from time to time about the number of people who drive cars and the number of people who understand how they work and do maintenance on them, right? At the end of the day, there'll only ever be so many node operators. That will grow, obviously, over time as the number of people involved in the world of Ethereum grows. You'll, of course, get more node operators. You'll get people who kind of level up, so to speak. They spend enough time in the world of Ethereum. They get some knowledge. They see how attractive running a node can be, especially right now with liquid staking yields being depressed by that validator queue. So assuming you can get through that queue, running a node can be a little bit more attractive than it might otherwise be. I suppose the other part there being that for a long time people have looked to the world of DeFi and the returns available there and said, well, liquid staking returns are fine, but then you just go and do something in DeFi and get a whole lot more yield. Well, not only is there a risk and reward correlation, but some of those yields are not quite as high as they used to be so far anymore. So yeah, there's a lot of different considerations there, and some of them kind of shift from day to day. And I feel like I've rambled on about this topic a little bit too much by now. But yeah, those are a few of my thoughts.
Yeah, I mean, I think you hit on some of the key points, right? It's interesting. I got to think about Val's commentary there about, do you actually have to be a mechanic in order to be a node operator, right? And I'm kind of thinking just to myself here, well, it's probably not mechanics that we need. I mean, we're all under the hood in our nodes trying to fix something that's broken at some point, but really maybe all we just need is truck drivers, right? Most truck drivers just know how to do the bare maintenance on their truck, and they bring it to a specialist when it goes down, right? Yet we need thousands of truck drivers to make the economy work. We probably don't need that many diesel mechanics, right? So I don't know what the balance is, but being a native Windows guy, I will say that given the choice between a GUI and a terminal, I think I would still, even though I feel very comfortable in a terminal environment, I think I would still click Windows more, right? Like I love my Grafana dashboard more than I do my terminal output on node status, right? But don't tell that to Joe. But I mean, I think it is going to be something interesting there. And yeah, I don't know when we reach balance, right? Like, balance in Rocket Pool, but also balance in ETH staking, right? It's one of the few guaranteed returns in ETH that you can get, right? Like you said, all the other DeFi protocols are, might be more lucrative, but there's no guarantee, and the return may not be in ETH. So, we're not even at 17% of the ETH population staked, and I don't know how far that goes and how much of this just up into the right growth and node in validators actually occurs and when it levels off. But I think you're absolutely right that we are going to need a lot more node operators than what we have now. One last question I had for you and the team is, I know you guys were thinking a little bit about some upcoming conferences. I know myself, I'm looking forward to attending Permissionless in September on Bankless to represent Rocket Pool, and so I'm getting kind of excited about that. But shortly thereafter is a staking conference in Dev Connect. I saw that ETH Staker has a couple of dates for a staking set of Dev Connect. Have you heard anything from the team or about sending some representatives to Dev Connect? And you'd also mentioned Masari's conference. Anything confirmed for the next Rocket Pool conference with the team?
Yeah, so this is actually kind of part two to what I was referring to earlier as kind of a marketing review or the asset review that Dave's looking at, which is kind kind of our participation at events. We're having some thoughts about mainnet in NYC, but I mean, even if you're thinking about ETH Denver, which we are intending to attend, I think it was maybe, I think there's only like a month to go. Was it like early August last year that that you started sending through some of that content, Ken, and we started looking at attending that. So even for for the next December, that's going to be rolling around pretty soon.
Yeah.
But our overall strategy for attending conferences and increasing our participation is also under review at the same time. I think this is probably another example of just like maybe some of the marketing that happens out there. There are a lot of conferences around, and that is great, and it's a great sign for the health of Ethereum across the world. But I feel like, well, while I haven't had first-hand experience at any other than Denver, a lot of them do seem to be kind of copy paste of each other. You just have the same kind of event in a different city. You know, in the case of Europe, maybe it's just a 1 hour train ride away. I'm sure they'll all say that their event is special and unique, and I'm sure in some ways they are. But in the context of flying from literally the other side of the world, I think at that point, and that has always kind of been our sticking point, in that the cost to attend, both in terms of dollars for travel and time as well, is probably the highest out there. Unfortunately, being based all down here, down under, I guess Joe excluded. So it is something that we've had to spend a bit of time thinking about, and ideally, you know, what I like to see is kind of a more, I suppose, traditional budgeting exercise where we can look at different events, their location, their cost. At the end of the day, probably every event is going to cost the same for us to attend, unfortunately. Anywhere in the Northern Hemisphere is about the same, at least when it comes to flights, and that's not cheap. The other event that we had kind of pretty much penciled in was, I think, was it the next DevCon that was, that was happening Q1, maybe Q2, but sometime next year in Southeast Asia. Obviously, that's pretty great for Australia. There's a lot of flights heading up that way. Hopefully, we're not on Jetstar or one of the low-cost carriers, but there are a lot of them, and they help to keep the prices down. And as a destination, they're pretty cheap as well, so that kind of makes sense. But yeah, I've been trying to think of creative ways that we can somehow get presence at more of these events, just like the marketing and the branding and the assets. We are perhaps a little bit towards the other extreme of the spectrum. While I do know there's teams out there that are literally pretty much always on the go at almost every event that pops up, I question, at least for us, the value in that. But I think we can move towards that direction a little bit from where we are. The question just remains the best approach to do that. In some cases, maybe it's having people like yourself represent the protocol later in the year at permissionless. Maybe it's kind of a combination with you plus one or two others. At the very least, I know in terms of the time, which is not insignificant when you consider, you know, time spent in a plane, which is often 3 days there and back from Australia, plus you know, you always get like a little bit of jet lag. Essentially, you're knocking out a week just to get somewhere and get back, let alone the time you spend there. And I know from personal experience, if I take 24 hours off, like completely from everything, Twitter, Telegram, Discord, even over the weekend, it can sometimes be a bit of a mission to get back up to speed, let alone like a weekday. So the time aspect, you know, you might hear that and think, oh, it can't be that bad. it's not insignificant, but at least with potentially a 50% larger team, not that that's necessarily going to happen, but it's going to be larger. We will have a little bit of luxury of having more team time available to dedicate to traveling. So that is another thing. I suppose, like with a few things on this call, unfortunately, the answer has been some variation of soon. But just like with the hiring, where we went months, I think it was, on community calls, it will happen eventually. We want to invest time to make sure that the decisions made are the right ones for Rocket Pool. And at the end of the day, that's why the protocol is still here, still around, still growing, right? It has been that kind of conservative and cautious approach in what is an otherwise pretty quickly moving and in many cases too quickly moving industry.
Many
move too
cases.
fast, make the wrong move, can be all over pretty quickly.
Yeah, no, and it's great to just hear you kind of talk these out and think it out loud, because I think that's exactly what you need. You need some strategic thought about what is the best use of the resources, whether it be time, whether it be staff, whether it be cost of travel, right, versus the returns benefit, right? We need we need to continue the community build up. We need to reach out for more node operators, and what is the best vehicle and mechanism to do that, right? And at the same time, there's collaborations with other protocols, or in the case of DevCon, there's coordination with other key client teams and Ethereum core developers. And it's just so essential to have kind of that in-person communication. So I do not envy you and Langer's trying to weigh all these things and figure out the best strategy for the team forward. So I commend you for giving it all that deep thought, though. Well, that brings us to the end of at least prepared agenda items. Mav, is there anything that we didn't cover in today's call that you feel is important for the community to know?
I suppose I think I mentioned it, but I'll say it again anyway. The usual plug for upcoming calls. They are listed in the event section of Discord as always. There are a couple where we're still waiting for some kind of details to fill out. But it always is an interesting place to have a look at what we have upcoming. Sometimes you might be able to see a little bit of alpha there. I think, let me just go and dig it up. I think it was Raft that announced they're supporting rETH overnight. I can't quite find it. I don't want to click too many buttons while we're on this space. It can sometimes be a little bit unstable, but yeah, we do have a call with them coming up on our 4th of July. So a little bit of a different date. Obviously, the next day, 5th of July being probably for everyone who celebrates it, 4th of July. Not the best time for a call. I'm guessing most people would be otherwise occupied, so we are switching things up a little bit for that week, and we do have that list of guests, and I think there's one panel going well into next month, so check that out and tune in.
And Dr. D and the Dr. Doofus in the trading channel just confirmed it's Raft. At first I thought you said Ralph, and I was like, well, that's an interesting DeFi name, Ralph. Raft is what Dr. Doofus is saying.
Oh, yeah, thanks, Dr. Doofus. Sometimes with the, honestly, with the amount of protocols that are talking about supporting ETH, and often these days in very similar ways, right? Like, oh, hi, we are a liquid staking token collateralized stablecoin. Oh, surprise, surprise, you don't say. I just need to check myself that I'm thinking about the right one and not accidentally leaking something. But yeah, we do have an announcement, and the Raft team will be on as a guest in just a few days' time to chat all about that.
Excellent. Well, Mav, any other things before we call it a day here?
think we're probably good. Decent call, coming up to almost an hour and a half. It's always good to chat with you, Ken, and thanks to everyone for listening in.
Yeah, it's great to be back. I'll have to put some poster or some pictures in of some of these rockets. But I found out if we ever want to get the Rocket Pool logo on a rocket in this competition, I don't think it will cost us that much. And maybe they'd even put a Rock 5B Proteus as their payload. So that might be another marketing strategy for next year.
Let me write that down. Wonder if we can have it validating in space.
Yeah.
Maybe a bit too much of an ask, but I'm sure it'll happen one day.
Maybe. Yeah, these the collegiate teams are, at least right now, limited to below the carbon line, but pretty soon I think they'll be able to routinely pass it.
That sounds like a fun trip.
Yeah. All right, Matt. Well, it has been a pleasure to be on the call with you and everybody else here on the call that's joined. It's a pleasure to be back, and looking forward to hanging out when trading with everybody.
Sounds good. Thank you, sir. We'll see you over there.
Okay. Talk to y'all later.